Well, hello, Mavericks. Let's get into the June 20th currency recap. Joe with you here. It is Thursday, coming out of a holiday. You guys know the drill. Take responsibility for the outcome of whatever you get from these courses. I'm going to break down the meaningful news of the day. We're going to take a look at the technical analysis of the overall markets, and we're going to pair some currencies together, see if we can't get some trades. Just make sure that you take responsibility for them.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, you guys are going to see that we had a little bit of corrective action in the U.S. equities. This was to be expected after a very strong CPI, or I should say a very dovish CPI, showing that inflation was actually starting to go to the downside, showing the Fed that their actions they've taken so far are actually starting to curb interest rates. This had a positive effect on the equity markets, and I think it just flowed through over the weekend. And then into our holiday, which was yesterday for the U.S. markets, Juneteenth. SNB, the Swiss National Bank, cuts rates by 25 basis points. Let's take a look at the impact it had on its currency as the Bank of England make no change to their rates as they are very comfortable with their target of a 2% inflationary rate. And it looks like they're right on track. How did we finish overall in the currencies? Well, the yen continued to weaken. This is a currency that has been getting smashed as of late. In fact, it's one of my favorite to pair. US dollar, a little bit of a bounce today, 0.31%. Franc, obviously, when you cut interest rates, it's going to lose value. However, it really didn't give us anything to trade because it's still in its overall bullish pattern, just a little bit of a corrective action. Now, that can't change, obviously, day to day to day, but we'll take a look at it as well. Euro stayed flat, continuing to stay weak. The pound, no real change. The CAD is having a nice bounce, I do believe. I'll have to echo what Corey said yesterday. That has to do a lot with energy and oil, with its bounce as well subsequently. So they kind of correlate together. The Aussie flat and the New Zealand dollar up a little bit as well. The two strongest staying where they're at. Overall, how do the markets finish? Well, flat, down a little bit. I call it corrective action. Yes, the markets are overextended. We saw a lot of stuff pull back. The S&P was down 0.25% today. However, that was not the biggest loser. It was definitely in the Qs. NVIDIA, lots of the telecommunications and tech took a pretty good haircut today, which is to be expected since they are the leaders. I don't want to look anything past that, folks. It really is just a little bit of a hesitation out of holiday weekend. We are going into an options expiration week. This Friday is the June expiration cycle. Sometimes that has a lot to do with things. Sometimes it doesn't. But these markets were definitely due for at least a hesitation or a pullback. We'll keep it there. World index down slightly. Crypto up after a bounce. Crypto has actually been weak as of late. The only thing that's actually doing really well is Ethereum. We'll look at that as well. Gold with a good bounce at 1.27%, and oil as well, continuing that energy bounce that we've seen over the last couple of days. Bitcoin Cash, Ethereum, and Litecoin. Sorry, folks, I meant to say Litecoin was the strongest. I don't know if I said that on the previous slide, but it is Litecoin, and it is the strongest by far. Bitcoin Cash, and Ethereum are showing a little bit more of a pullback or kind of a bearish sentiment as of late. Regardless of what is causing it, we just gotta have to trade the markets in front of us. Usually these cryptocurrencies will either lead the market or be behind the market. It looks like the cryptos are kind of in a corrective action. They have been for a little bit. Overall, folks, I wouldn't look too deep into anything that I've seen over the last few days. It's just a red day. Let's take a look at it. So our market outlook has not changed. You can see that we're overextended. We're up here above moving averages. They're sloping correctly. The price action is just exceeded a new high after new high. And yes, folks, we gapped up today. We traded down. We closed on the lower end of the overall day. However, it is still a bullish candlestick. Let's take a look a little bit deeper. And what I'm talking about, it's very difficult to get bearish on something like that. Now, the volume was pretty high. However, if you take into consideration that there might have been some traders willing to take profits anywhere above this line, meaning, hey, here's that CPI announcement right here. Everything looked pretty good, a little bit of a push higher. Now, this is the SPX, folks. The Qs or the NASDAQ itself was a lot more aggressive. It was not more of a 1 or 2 day hesitation. This was absolutely straight up. So we're not going to change our outlook based on 1 day. I would like to see 1 or 2 more days with this amount of volume and maybe some larger candlesticks. But even then, guys, if it pulls back to this line that I drew here, it's just a healthy, comfortable bull pullback. Let's jump over to the economic news. And as you guys can see here, the Swiss National Bank did decrease their outlook, dropped the policy by 25 basis points at 1.25%. Although if you go a little bit further down, the Bank of England decided to keep things nice and tight as they're very comfortable with what they're seeing in their inflation, very similar to what the US is seeing as well. So even though the franc did cut interest rates, we'll take a look at its currency because it did pull back a little bit, but it is still bullish overall. What do we got left for the rest of this week? I'll just go ahead and highlight it because we did come out of a holiday yesterday, but it's just a lot of push-pull. So the euro, the pound, the CAD, we got retail sales, flash PMI, manufacturing numbers, some of the things that you've seen before. But when it comes to anything specific to the pound, the CAD, and the franc, I don't think it's going to be that big of a deal because they have already just updated their rate policies. So I don't think there's going to be much change in the markets. Maybe we see a little bit more of a pullback or maybe a subsequent bounce to kind of erase what we did today. It's very difficult when you come out of a holiday, especially if that holiday is midweek, to really put anything to work here, folks. I really don't want to get in new positions because I just don't know what tomorrow will bring. However, we can definitely prepare for it. So let's take a look at some of the, let's break down the currency analysis and I'll show you what I've done here. Not a lot of change except for what's obvious. I went ahead and moved the yen further down. It's because it's actually sliding below support levels. This is the weakest I've seen this currency in a long time. Dollar pretty much stays the same. I think cryptos in general are pretty weak. We'll see if that's going to change, but Ethereum obviously just kind of holding in there. And even at its best, it's zero. A lot of times these will correct and they will correct before the markets and then we'll see a surge in crypto. I'm not going to go too far over that. The two weakest, I think, are going to be the yen and the euro. I do like what they're doing. The CAD is having a very strong bounce now. I do think that's because of the energy bounce, but it's still a zero at best. I don't really want to mess with it. However, we can use it maybe against some of the weaker stocks like the yen and the euro. The Aussie and the franc. Obviously, the franc might be something that I might kind of X out here for a second just because it did decrease its rates. So we'll see if that's going to have a longer term effect. So I'm going to focus a little bit more on the Aussie and I'm completely fine with the pound and the New Zealand dollar. The reason why the pound didn't really change anything. So it's not that the pound got stronger, it just didn't get any weaker. So the crosses I'm looking for are going to be anything against the yen or the euro. I know, folks, that's including the CAD, that's including the US dollar. It's just kind of where that chart is. My expectations are for things to continue the way they are. Now, if we get 1 or 2 more days to the downside in the equities, the US equities, or we get a little bit of change, of course. However, my main focus is going to be what triggers first and what has the higher probability. So let's jump out and take a look at a couple of these. The first one, folks, is going to be almost too obvious as I'm taking the strongest currency of the Australian dollar against the yen, and I absolutely love this pattern. This is an ascending triangle pattern. It's one of my favorites regardless of what you're trading, currencies or equities, securities, or options. It doesn't matter. I just love it. Now, it is feeling a little bit extended. However, when it comes to currencies, what I've noticed is these things hold true for quite some time. So this is definitely at the top of my list. As long as you can get the risk reward parameters to work, this is still a viable trade. Another one that I think is right along these lines will be the second in line, which is the New Zealand dollar versus the yen. And this is a little bit more feasible as it is kind of emerging slightly over it. Now, I wouldn't be nearly as aggressive as I would with the Australian dollar and the yen, but the New Zealand dollar yen also looks like a beautiful pattern here, ascending triangle breakout. Now, folks, I am absolutely focusing on the daily charts. You could knock this out in the 4-hour and give yourself a little bit more precision when it comes to targets or an entry. But I'm looking at the whole motion of the ocean. What I've been seeing in the equity markets as of late is a lot of continuation in strong sectors and continuation of weak sectors staying weak. And if that holds true, there could be some pretty good moves in the currencies as well. So I told you guys I would take a look at the franc. So let's jump into it because it really didn't do anything except hesitate. Here's the franc by itself. It had been a very strong move to the upside. And here's that subsequent candle based on the fact that they cut interest rates by 25 basis points. It's still a +3. It's still super strong. Maybe a plus. Yeah, it's still a +3. We got the moving averages crossed. They're both sloping higher. Price action is setting higher highs, higher lows. It's just a little bit of a hiccup. So if anything, folks, you could actually just kind of step away from it and not use it as a pairing. Let's stick with the yen. Let's stick with the euro as our weakest. And let's do something with it when it comes to the Aussie or the New Zealand dollar. Let's take a look at the yen because the yen's weakness, I really think, can create advantages even with other currencies that are 0 or +1. So let's go through them one by one. Starting with the Aussie yen, one of my favorites. I do like it. If you feel you're chasing it, that's fine. But let's go down to the next one here. Let's take a look at the CAD yen. The CAD is having an oversold bounce. It's coming off of a bottom. It's having a really good surge based on the recent strength in energy. If you believe that will continue, specifically oil, it's got a beautiful pattern here. So the CAD yen, definitely feasible. Here is the franc yen, and you can see that it's hesitated a little bit because the franc did raise interest rates. I would completely stay away from this based on the fact we got to see what the Swiss franc does in the shorter term. Here's euro versus yen. This is two of the weakest. I don't want to pair them together, but I did like the pound yen. And the pound yen is something a little bit more kind of slight sideways with this very slow building. Hey, loosen up your stop loss, let this thing grow because we have a pound that has been very strong but hasn't done anything. It's just been sideways for quite some time. But with the yen continuing to be weak, and when you come with the Bank of England comes out and says, we're very comfortable with where we're at, we expect stability, right? That says a lot. So this could be another potential move to the upside. New Zealand yen, we already looked at that. Obviously, once again, it's one of my favorites, Aussie yen, New Zealand yen. But I do want to finish with the US yen, and this one's kind of cool, but it's not my favorite. So overall, folks, I'm comfortable with almost anything against the yen. I do think the markets are in a consolidation process. I truly do. I don't think we're going to get too much movement through the end of at least this week. However, folks, corrective action brings what it does. And so when you have the strong staying strong and the weak staying weak, we can take advantage of it. Let's continue with those pairings. I gave you guys a couple of choices against that yen. Beating it down's fine. Could the yen bounce? Of course it could. I like the euro as well. But let's stay away from the franc. I have it a +2 still. It did have its policy announcement. This could bleed its way down from a +2 to a -1, or excuse me, a +2 to a +1. So let's stick with what's strong. The pound isn't very exciting, but it's stable. So the pound yen would be good. Aussie yen, New Zealand yen. So Swiss National Bank cuts rates by 25 basis points. No change in the Great British Pound. We do have economic data coming out in some of the other countries, but I don't think it's going to make that big of a difference as we're getting into the weekend. And two of the countries that are announcing stuff has already made announcements. I'm not sure what happens with the euro overall, but it's definitely not my focus. Let's make sure we continue to emphasize and play relative strength and weakness and proper position sizing. A lot of these trades are out there, folks. There's a lot of opportunity. We just got to make sure that we play them responsibly. And if we're going to do something that feels risky, just make sure you stay risk adverse. We can position size for it. All right, folks, thanks so much for joining me. We'll talk to you next time. Bye, everybody.